All right, let's talk about BKKT. What a story. This thing has been on an absolute tear, and we're going to dive right into the anatomy of this massive stock surge. We're talking about a classic Wall Street drama, full of crazy volatility, incredible momentum, and yeah, some serious warning signs. This stock has been on a wild ride, and we are going to break down every single twist and turn for you. So, first things first, let's get a feel for what we're looking at here. And I mean, we are not talking about some gentle, steady climb. The analysis calls this a parabolic rise, which is basically a fancy way of saying the price chart has gone almost straight up. It's like a rocket launch, and you better believe a move like that gets everyone's attention. And to really grasp the sheer scale of this roller coaster, you got to look at its journey over the last 3 months. Check this out. Back in July, it's trading above 18 bucks. Then, bam, it gets chopped in half, hitting a low around $9 in August. But from that absolute bottom, it stages one of the most explosive recoveries you'll see, just rocketing all the way up to where it is now, at 47.49. Insane. And that right there brings us to the million-dollar question. The one you're probably thinking right now if you're looking at this chart. A move this fast, this aggressive, it's electrifying, for sure. But it makes you wonder, right? How long can this possibly last before, gravity decides to kick in? So to figure that out, we really have to look at both sides of the argument. So let's start with the bullish case. All the reasons this thing might just keep on running. Okay, so the most important thing to get here is that this isn't some random fluke. The analysis shows it's being powered by two huge forces. First, you've got this incredible momentum. The trend just has a ton of power behind it. And second, you have insane trading volume, which tells you there's a huge surge of interest and, well, a whole lot of buying pressure. And wow, this slide really puts that power into perspective. What you're seeing is the current price compared to its simple moving averages, the SMAs. You can just think of those as the stock's average price over different timeframes. Look at that. The current price of over 47 bucks, it's just completely blowing its own history out of the water. We're talking almost 3 times its 20-day average and more than triple its 50-day. That's not just a trend. That is pure, unadulterated acceleration. And what's feeding this fire? This number right here, 59.1 million. That's the on-balance volume, or OBV. It's basically a money flow tracker. Think of it like this. On up days, the volume gets added to the pile. On down days, it gets taken away. So a big positive number like this, it's a huge confirmation that big money is piling in. It's simple, really. More money is flowing into this stock than out of it. Okay, but every great story has a twist, right? For every single bullish signal we just looked at, there's a big flashing red light on the dashboard, one that's screaming, hey, maybe this has gone a little too far, a little too fast. So before we jump into the numbers, let's quickly get on the same page with this word, overbought. Now, this doesn't mean the stock is guaranteed to fall. Not at all. It just means the price has shot up so fast that it's gotten kind of stretched thin, statistically speaking. It's way more likely to snap back. The best way to think about it is like a rubber band that's been pulled and pulled and pulled to its absolute limit. All right, warning sign number 1, the Relative Strength Index, the RSI. Now for this indicator, anything above 70 is usually considered overbought. Well, BKKT's RSI isn't just a little over 70. It's sitting at a jaw-dropping 91.63. That's not just overbought, that's like deep in the red zone. It suggests that the buyers might just be running out of steam. And if you thought that was extreme, check this out. That overbought signal is backed up by another indicator, the Money Flow Index. It's kind of like the RSI, but it also considers volume, so it's watching the money. Here, the danger zone starts at 80. And BKKT? It's at 97.12. I mean, come on. We are once again looking at a reading that is just screaming that this market is stretched to its absolute limit. This chart is just a perfect visual of how wild this has gotten. See that top line? That's the Bollinger Upper Band. Think of it as a statistical guardrail for the price. Normally, like 95% of the time, the price should stay inside these bands. But look at BKKT's current price. It hasn't just touched the guardrail, it has completely smashed through it and kept on going. That is a massive signal of some really unusual and maybe unsustainable activity. So this is it. This is the heart of the conflict. On one hand, you have this unstoppable momentum, and on the other, you have pretty much every indicator on the planet screaming, be careful. And this really just lays it all out, doesn't it? You've got the raging bull on one side, looking at this powerful trend with all this money behind it, saying you do not fight this trend. And then on the other side, you've got the cautious analyst, looking at a dashboard full of red lights, saying, no way, this can't possibly last. It's that classic Wall Street tug-of-war between momentum and metrics. So when you put all the evidence from the analysis on the scale, which way does it tip? Well, the conclusion is that because there are just so many extremely overbought signals, the most likely thing to happen next is a bit of a cool down. That could mean a short-term drop in price, a correction, or maybe it just trades sideways for a while to catch its breath. Okay, so if we're expecting a cool down, what exactly should you be watching for? The analysis gives us a few very clear scenarios and some key price levels to keep an eye on. So, here are the 3 possible next chapters for this story. First, you have the bull scenario, where the momentum just completely defies gravity and keeps pushing higher, maybe towards that $55 to $60 level. Then there's the neutral, and probably most likely, scenario. The stock takes a well-deserved break and just chills out, trading sideways. And finally, the bear scenario, where all those warning signs finally catch up and we see a healthy correction back down toward that $40 to $35 range. And these are the key battlegrounds to watch on the chart. If you're a bull, the big test is breaking through that resistance up around $50 to $55. But if we do get that pullback, then the key area to watch is down around $40 to $35. That's the potential support level where buyers might decide it's a bargain and jump back in. And that really brings us to the final takeaway from this whole analysis. And it's a great point. Yeah, you have to be cautious here. But it also says that because the underlying trend is so strong, any big dip could actually be seen as a great buying opportunity for someone with a longer-term view. So that leaves us with the ultimate question, doesn't it? Is this a rocket ship that's just cooling its engines before the next launch? Or is it about to come crashing back down to Earth?